Imagine you're sitting on 1,200 XRP today. At the current price of about $2.34 per token, that's a position worth roughly $2,808. You look at that stack and ask yourself, should I hold tight, buy more, or take profits now? But the bigger question looms, what could these 1,200 XRP be worth by the year 2026? But before we continue with the video, I just want to say that if you want to trade crypto, I trade on WEEX. It's a reliable exchange with deep liquidity, low fees, and a massive selection of coins. You can claim up to $30,000 in sign-up bonuses and trade with up to 400x leverage. Sign up now with the link in the description and claim your bonus. No KYC required. In this video, we're going to map out every angle, from the very latest in the SEC battle and Ripple's global partnerships, to technical upgrades on the XRP ledger and real-world adoption in finance. By the end, you'll have a clear sense of realistic price targets for XRP and what your investment might look like once the dust settles in 2 years' time. Let's kick things off by catching you up on XRP's current market context. After a long winter of regulatory uncertainty, XRP has roared back above $2.30 in May 2025, its highest level since early 2018. That rally was fueled by a combination of broader crypto market strength and a string of positive headlines out of Ripple's SEC lawsuit. In mid-2023, a federal judge ruled that XRP, when traded on public exchanges, is not a security, a landmark decision that helped clear some of the legal fog around the token. Since then, Ripple Labs and the SEC have been in the home stretch. The SEC filed a narrow appeal on institutional sales of XRP, but in April 2025, they unexpectedly withdrew that appeal, effectively conceding the public market ruling and limiting further challenges. With that last bit of uncertainty chipped away, U.S. exchanges like Coinbase and Kraken have signaled plans to expand XRP trading pairs, and major custodians are reportedly in discussions to offer XRP custody to institutional clients for the first time. Now, that regulatory backdrop sets the stage for a meaningful shift. Fewer legal overhangs means XRP can finally be judged on its fundamentals, its technology, partnerships, and adoption, rather than courtroom drama. And speaking of adoption, let's dive into what Ripple has been up to on the global stage. RippleNet, the payments network that uses XRP as a bridge currency in its on-demand liquidity, ODL service, has grown from a handful of corridors in 2020 to more than 45 payout markets today. Banks and payment providers in Mexico, the Philippines, India, and the UAE now rely on ODL to settle cross-border transactions in seconds instead of days, and at a fraction of the cost of traditional remittance rails. This isn't just a pilot, it's live, volume-driving usage of XRP at scale. In early 2025, Ripple announced a partnership with a major Canadian bank to pilot real-time settlement for corporate treasury operations using ODL. That followed a deal in late 2024 with a consortium of Latin American microfinance institutions, which reported a 40% reduction in remittance costs after integrating XRP-based flows. Those concrete savings are what really move the needle for banks and corporates. They're not in the hype business, they're in the ROI business. On top of payments, Ripple's Xpring investment arm has funded more than 20 projects building on the XRP ledger. Those range from decentralized stablecoins tied to national currencies to NFT marketplaces focused on digital art and gaming assets, to developer tools that let coders build smart contracts in familiar languages like JavaScript. In March 2025, XRPL Labs rolled out Hooks, an on-ledger mechanism that enables custom business logic at the transaction level. That upgrade transforms XRP from purely a payments token into a programmable asset, capable of powering DeFi-style applications directly on its chain. Looking ahead, central banks are also eyeing the XRP ledger for pilot programs. In February 2025, the Bank of Thailand announced plans to trial a retail CBDC on a fork of XRPL, citing its high throughput, up to 1,500 transactions per second, deterministic finality, settlements in 3-5 seconds, and built-in escrow capabilities. If even a fraction of global CBDC projects leverage XRPL technology, that could create massive institutional demand for XRP as on-chain liquidity. All of this real-world traction feeds directly into XRP's supply and demand dynamics. There are 100 billion XRP tokens in existence, with roughly 54 billion currently in circulation. The rest sit in escrow under time-locked release schedules, ensuring predictable, gradual increases in supply. As demand from banks, corporates, DeFi developers, and potentially central banks ramps up, that static supply base means each incremental use case has an outsized impact on price. So let's translate that into numbers. We'll walk through three scenarios: conservative, realistic, and bullish. In our conservative case, Ripple's core ODL network continues to grow steadily but slowly. Legal clarity is maintained, but no major new corridors open, and broader crypto sentiment remains mixed. By 2026, XRP might trade in a range of $3 to $3.50. That would value your 1,200 XRP at $3,600 to $4,200, a solid 28-50% gain over today's levels. Not life-changing, but respectable, especially when compared to cash or bond yields in a low-rate environment. In our realistic scenario, we assume full resolution of all SEC issues, multiple new bank partnerships in Europe and Africa, growing token-based lending and stablecoin projects on XRPL, and gradual ecosystem effects as hooks and other upgrades drive developer adoption. A 2026 price of $5 to $6 becomes plausible. At those levels, your 1,200 XRP positions you at $6,000 to $7,200, a 156% return over today. That's the kind of outcome long-term crypto investors dream about. Finally, in our bullish or moonshot scenario, Ripple achieves multi-jurisdictional regulatory clearance. XRPL becomes a favored settlement layer for tokenized assets. Central banks launch CBDC pilots on XRPL, and retail DeFi use on XRP surges. In that case, prices could reach $8 to $10 by late 2026. Your 1,200 XRP would be worth $9,600 to $12,000, 428% above current levels. That's a transformative return, turning your original $2,808 into a small fortune in just over 2 years. Before you start daydreaming about Lambos, let's ground ourselves by remembering the risks. Crypto markets are volatile. Regulatory shifts, macro crises, or unexpected technical bugs can send prices south overnight. Competition from competing payment rails like Stellar, Swift's new GPI enhancements, or private stablecoin networks could cap XRP's upside. And if Ripple mismanages escrow releases or overextends its partnerships, supply overhang could weigh on price. Still, XRP's decade-long track record, its singular focus on payments, and the momentum we're seeing in 2025 all point toward a bright future. From sub-$0, 20 levels in the depths of the 2020 bear market to north of $2 today, XRP has demonstrated resilience and institutional utility. And while nobody can predict the future with certainty, the convergence of legal clarity, real-world use cases, technological upgrades, and potential CBDC integration sets the stage for significant upside by 2026. So what will that 1,200 XRP in your wallet be worth 2 years from now? In a conservative world, think $3,600 to $4,200. In a realistic bull market, $6,000 to $7,200. And in a very bullish scenario, $9,600 to $12,000. Drop your own predictions in the comments. Where do you see XRP trading at the end of 2026? And what catalysts do you think will matter most? If you found this breakdown helpful, make sure to hit like, subscribe for more crypto deep dives, and ring that notification bell so you don't miss our next analysis. Thanks for watching, and here's to making smart moves in the crypto world. I'll catch you in the next video.